Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everybody, eventful day in the market, checking in on YELP GWPH PCLN NVDA and Tesla. So lots of candlesticks looking similar today, with a big upper wick starting very bullish to start the day, and then at 2 p.m. with the FOMC reaction and the reaction to Ryan's comments on the tax plans, everything was erased, and some names are holding up better than others. Yelp is one of them. A lot of names closed near the low of the day. We did clearly reject from the middle Bollinger Band resistance of 33.39. Big upper wick of profit taking. The bears are certainly still in control, and we have to get over that middle Bollinger Band on the daily to see any kind of upside from here. Support, we're looking down at the consolidation low of 32.10 and the lowest price we saw on the dump of 31.60. So the weekly time frame, bulls trying to confirm the candlestick and follow through. At this point, it's just another potential bear flag if we cannot get over the weekly exponential resistances, which did reject the last bounce attempt, which ended up being a bear flag heading to lower lows. So the bulls still do have proving to do on Yelp, and middle Bollinger Band turning into support on the daily is step number one. GWPH continuation to the downside. The clear bear break yesterday closed at the low of the day, favoring momentum to the bears heading forward. Key break of 118 support. We're looking down now at 112. So the biotech sector is dumping. GWPH seeing that weakness beforehand and now only magnifying to the downside. Lower highs and lower lows since March. And the bears are in full control of GWPH as we're losing the weekly middle Bollinger Band. If we close this week below 120, 112 is the next support, so there's still some downside potential. And the close near the low of the day below the lower Bollinger Band with a lack of the lower wick certainly favors the bears, and so does that high volume standing out. Look at the volumes in March. We had the top being hit, and since then, every spike is bear volume. PCLN, bulls were looking great to hold the middle Bollinger Band daily, looking great to break the lower high pattern. We broke the high of the previous 2 days, and we are heading back towards the all-time high before the market weakness struck. And here we are losing the middle Bollinger Band for the first time in over 3 months. This is absolutely stands out as a significant development, and support from here after the low of today of 17.59. We're looking down at 17.39 as the next support. So there's $20 of downside here without a ton of support built in. Granted, we have seen six red days in a row. But as of right now, if this market weakness continues, which momentum is certainly favoring the bears heading into tomorrow, we will look for PCLN to continue to consolidate as well, and that middle Bollinger Band is now key resistance to be watching. Weekly time frame still strong for the bulls, still exponential moving average supports, and we've seen nothing but healthy consolidation on the way up, and we have built a decent amount of supports on the way up with this consolidation. And that key support is 17.33 to keep the higher low pattern intact. So 17.39, 17.33. PCLN supports. NVDA, we played the oversold bounce first thing. We saw the week close at the end of the day yesterday, which had us anticipating a gap down open was likely. We got that gap down open, a quick flush to the downside. We found support here, the low of March 13th, 99.51. That was the next level we were looking at after 100. Low of today, 99.50. 1 penny difference bouncing off that level. We got a nice bull move to the upside, couple dollars. Played that oversold bounce, but then it was clear that with market weakness, we are seeing a strong correlation between the semiconductor sector and the S&P 500. So once the bearish reaction to the FOMC came in, we rejected here from just under the 100-day moving average resistance, big upper wick of profit taking, and we're looking down at 99.50 support, potentially going to be tested again tomorrow, as the bulls did not hold on to any gains that they saw today. So this oversold bounce just cooled off the RSI levels on the shorter term time frames like the hourly, and now the bears are back in control. If we break 99.50, I'm looking at 98.38 as the next support level. Bearish MACD cross, bearish TCG cross, and we're losing the weekly middle Bollinger Band support of 103.44. This weekly middle Bollinger Band is held for over a year. Losing it is significant. Our lower high has been set, and if we break 95.17, we see a lower high and a lower low, and that will absolutely shift momentum and the whole mindset of this chart for NVDA. We're going to see increasing bear volume. We still have 40% of the week left, and the bears are starting to take over here. So the bears are in control of NVDA, and we need to find a new support level. We have not found it yet. Tesla complete turnaround, double top by 7 cents at the all-time high on the daily, and a loss of the upper Bollinger Band indicating consolidation is coming. We also closed at the low of the day, favoring momentum into the bears tomorrow. We're looking at 294.20, and the next support after that is previous resistance, 287.39 and 283.45. So previous resistances to look at support, because we shot to the upside over 2 days here after such a big giant move for the bulls. We don't have a ton of support established in this area, and that's why we saw such a quick turnaround, $10 from the high to the low. And we're looking for more downside tomorrow. Support, again, 300. Actually, we already lost 300 psychological. So I'm looking down at that previous resistance, 287.39, as the next support level to be watching. Weekly time frame for Tesla. I think it was the last video where I said I anticipated to reject from the weekly upper Bollinger Band because we had 3 trading days left to go, and it would require the bulls to remain very strong with little consolidation on the daily time frame to remain above the weekly upper Bollinger Band. So we are rejecting from that level. If we close this week 291 or lower, and actually, let's call it 293 or lower, we will see a bearish reversal inverted hammer on the weekly time frame, and we'll look to fill this gap at 282 on the weekly. So bears have a lot of momentum on the daily time frame for the S&P 500. We're seeing it on all these individual names whose candlesticks look so similar with a complete 180 turnaround by the end of the day. Check out my tech sector video. In my opinion, the tech sector is the key to the S&P 500, and the S&P 500 correlations are the key to all these high beta individual names. I appreciate you watching. Hope you have a great rest of your night, and we'll see you tomorrow.